Good morning, everyone. This is Doug Campbell with Right Way Options and your morning market preparation video for October 2nd, 2017. So it's good to be back from Chicago, and thank you, everyone, for your patience while we were gone. We had a great trip. We met a lot of good people. Picked up some good information and tips from different folks. It was just really a good trip to the CBOE, and I got to be honest, it was just an absolute thrill for me to be able to stand there on the floor and watch our market work. Very, very cool stuff. So this morning, the market, after the tragic shooting in Vegas, I actually half expected to see the market dipping this morning in reaction to that when I first looked at the futures. But no, we're going to continue to go higher. And I guess it really is not that big of a surprise. If a threat of nuclear war from North Korea is not enough to slow this market down, a mere shooting, a slaughter, I should say, which is very, very sad, in Las Vegas, at a Las Vegas concert, should not slow this market down. So this morning, we're looking at a gap up open here in the diamonds. New record highs in the diamonds at the open today. A very good pattern. There's really nothing here that suggests anything but more bullishness in the market. And I got to tell you, folks, I hear from a lot of people that are trying to want to predict that this market is overbought. And I agree, we are very extended. We appear to be extended. But rational thought is not really what the market is about most of the time. I clearly remember what happened in the late 90s with the market when the rally continued on without any rational thought at all. The bulls were just in control and they wanted to buy. So with that in mind, the only thing we can do as retail traders is continue to follow the trend. Try not to predict, just stay with the market trend. Make sure you're buying low risk entries when you enter, but just stick with the overall trend of the market, because that will help you or serve you well most of the time. Now, that doesn't mean that you don't prepare or plan. If at some point in time this does begin to break down, and we look like we might start that here, but that was not the case. So you can have a plan, be prepared to protect yourself, protect your capital, protect your profits. But don't try to predict when that's going to occur. Just, you'll go broke waiting for it to occur. This could go on for another year or more. Who knows? Let's just stay with the trend and let the trend work for us. The other thing I hear quite often from folks is that they just want to set it out while the market's being irrational like this. They don't want to really trade much. And while I agree there's times to sit out where there's times to sit on the sidelines, when we see this kind of uber bullishness, we want to move with the market. And just remember this, that, as long as the market is bullish, it's going to be a lot easier to trade long than it is to trade short. Rising tide will lift all ships. And that's kind of the case here in the market. Everything just kind of wants to move higher. So stay with that trend as long as we can. SPY also breaking out last week to new record highs, is gapping up this morning to a new record high. By the way, always remember, when you gap up to new highs, always be prepared for some kind of a whipsaw or pullback price action. You want to watch that closely. The market could just pull back or take a rest after a gap up open. So don't be surprised by that. SPY looking very, very strong and no signs of that stopping at the moment. The only index that is having just a little bit of a struggle here is the Qs, and the Qs is still below resistance. It's actually below its longer term trend, but it's rallying up toward that, gapping up this morning. Watch this up here for the potential of a failure pattern, but with the strength of the other indexes, I would be really surprised unless we see the other indexes begin or to put in tops or show major weakness. Then I would expect the Qs to just continue pushing on up here toward that resistance level. Let's take a look at IWM. Now, IWM has lagged behind all year. Just really hasn't gotten going. Now, boy, it's making up for that right now. It's really cranking it up here. I don't want to chase this here, but I can tell you I'm seriously considering any rest, any pullback in here, picking up IWM and maybe even holding it in through the end of the year while it catches up with the rest of the market. Unbelievable strength going on here in IWM. Just a complete rejection of lows. So any kind of a rest or pullback may be an opportunity to enter as the small caps kind of try to just catch up. Let's take a look at the VIX. The VIX down here at these amazing lows, very, very close to historic lows in the VIX. There's no fear in this market right now. So we have to be cognizant of this, that complacency can create these really big fear spikes. And it only takes a news event or something to create those fear spikes. But as of right now, there's no fear here. As a matter of fact, it looks like the VIX wants to go even lower. So stay with the trend of the market, but be prepared with a plan if things start to turn, okay? I'm going to take a quick look at something I don't look at an awful lot for the course of the video, or for the video, but T2122 is an indicator that a lot of folks may not have access to unless you use TC2000. And all it is just the new high-low ratio, 4-week new high-low ratio. And as you can see, when we get up here toward these tops, this top side, this is our reversal area where we could reverse back lower. And down in here where we could reverse back higher. You can see it's very consistent in this trade. Or in this chart. Now notice we're up here near those highs, but we're not up here at these extremes. See how we can get higher here? We can reach these extremes up here, and we can even stay up here for a while. So I just wanted to show you that even though we do seem extremely extended here in some of the markets, we can go higher. And there's no sign really here of reversal just yet. Just the caution that it could begin at any time, and you should have a plan to protect yourself, protect profits, if it does decide to pull back or go sideways. Now, this in no way, shape, or form means that we're going to fall off a cliff. It just means that a rest could occur. We could get several days of rest and T2122 be right back down here for a more bullish move, okay? So it doesn't mean we have to just fall. Just know that we can go higher here, and if we do pull back or rest, it could just set up more upside for the market, okay? We're very, very bullish in the market. So, with that, hey everyone, I want to thank you all for being very patient while we were gone. Folks, if this is the very first time you've seen this information, please do me a favor and just click on that subscribe button on YouTube and the follow me button on Facebook. I'd really appreciate it. And also, please feel free to drop a comment and click those thumbs up buttons. That helps us a lot. Everyone, take care. Have a great Monday, the first trading day of this quarter. And I will talk to you all very soon. Take care now.